What's going on, guys? Welcome back to the channel. In today's video, I'm going to go over all the trades we took throughout the week as well as the plan going into this week. So, man, the last like three weeks have been so good to us because, the market's been moving a ton. And as you guys know, when the market moves a ton, the system is always on the right side of the moves. And we didn't take any losses this week. Didn't give any losers out to the Discord this week. It was a flawless week. So, I'm going to go over exactly how I did that and how we, took these trades. So again, these videos on Saturday, I like to pretty much just break down the system and, for people that are newer to it, kind of, go back over it and how we trade these charts. So again, every week we look at 0-day contracts and Friday contracts. 0-day contracts tell you the intraday trend in the market, and the Friday contracts tell you the bigger time frame trend. So what we look for on the Friday contracts is on the 30-minute, we're using the 10, the 50 SMA, extended hours are off. That goes for like the 0-day chart, extended hours are off. Make sure that's off because it will mess up your chart. So again, we look for this 30-minute time frame, and if the 10 is above the 50, the 10 is the green line, 50 is the blue line. If the 10 is above the 50 on one of the sides of the premium and the 50 is flat or curling up, that means we have trend in the market. And if that's on calls, that means we're trending bullish. If that's on puts, we're trending bearish. So as you guys know, the last like 3 weeks, we've literally been trending bearish pretty much the entire time. You can see 10 was above the 50 the entire way. As you can see previously, there were times we did break below the 50 SMA, and when we do that, the market is like pretty much neutral until we could get back above that 10 and the 50. Even though the 10 is still above the 50, when we do lose that key support, it's pretty much just a waiting game to see if we fully flip neutral or if we could rip back up and close back above the 10 and the 50 SMA. So that's how we were able to stay on the right side of the market the last like 3 weeks, because we were bearish pretty much the entire way, and when we weren't, we pretty much just got right back above the 10 and the 50 and flipped back bearish. So that's pretty much the way of using these contracts. Friday contracts are the main, like the higher time frame trend, 0-day contracts, intraday trend, and we use those 0-day contracts to help us find entries on what the higher time frame trend is. So we've been bearish the last like 3 weeks, so we've pretty much been focusing on short trades, so looking for like a 0-day cross on puts or negative cross on calls, things like that. But still, when we are trading bearish, I did take some long trades the last 3 weeks because there was opportunity to do so. So the only time that I do take longs when we are that's like against the trend is when we have a big gap between where price is and where the 50 is on the 30-minute. So like up in this area up in here, the 10 or not the 10, the 50 SMA is all the way down here at like 560. Price was all the way up here around the 10 SMA. So there's a ton of room to drop until we hit that key support on puts. So I'm pretty sure there was a cross on calls that happened during this time, and since we did get that cross on calls, that was a trade I took because we have room to drop until we hit the 50 SMA. So when there's room like that, I do give that call cross a go. But if we're sitting right at the 50 SMA when the cross happens on the 0-day calls, I'm not going to take it because we're at such a key spot on the higher time frame on the puts that it's not worth it. So yeah, that's pretty much how you go about taking those trades against the trend. And again, to get the contracts, I'm going to do this really simple. Friday contracts, you pick on Monday. You use them Monday, Tuesday, Wednesday, Thursday, and then on Friday you pick new ones, use them for Friday, and then on Monday you repick. So that's the basis of how you pick the contracts. And also, when picking the contracts, the Friday contracts, you round to the nearest fifth dollar, and then whatever you round to. Let's say like this week, we have the 550 puts. Okay, I'll just give a hypothetical actually because I don't know what we opened at, but if we open Monday, like if say this week we open Monday, we open at, I don't even know what SPY is at right now, but let's say we open at 562.10. All right, that to the nearest fifth is 560 because like 562.5 is the cutoff. So if we're over 562.5, that rounds up to 565. If we're below 562.5, that rounds to 560. So if we opened at 562.10, that rounds down to 560, and then from there you add 5 to get the calls, 565 calls, minus 5 to get the puts, 555 puts. So that's how you get the Friday contracts. You do that on Monday and on Friday, and just repeat the cycle again on Monday, and then repick on Friday. And the 0-day contracts, it's you round to the nearest dollar. So if SPY opens at 561.40, that rounds to 561. You use that 0.5 as the cutoff. So if it's 561.50, 52, that rounds up to 562. If it's 561.45, that rounds to 561. And then you add 1 to get the calls. So if it's the 561.40 we open at, you round down to 561, and then you add 1 to get the calls, 562 calls. If you subtract 1, 560, that would be the puts. So it's very simple. You just got to know how to round. I hope, pay attention in like first grade math on how to round, because you'll need that to pick the contracts. But that's pretty much how you get the contracts. Most of you guys, if you guys have been sticking around for the videos, you guys should already know that. That's like, you got to know the basics before you even toss on. Like, you got to get the right chart first before you could even take good trades, because if you just slap any contract, you're just not going to do well. There's a certain way to pick them. Just went over that. So yeah, so this is, like I said, we were bearish the last like 3 weeks pretty much, and I'll go over some trades that we took throughout the week. So just keep in mind, all these trades pretty much, if not, I'll mention it, but all these trades, the market has been bearish. So it's pretty self-explanatory. There's 2 trades in this picture right here. So market's bearish, and we got a put cross. So it's very simple. The best trade you could take is the 0-day cross in the direction of the Friday trend. So Friday contracts are trending bearish. Your best trade is 0-day cross on puts. And what did we get right here? 0-day cross on puts right off of open pretty much. We had this massive candle up in here. Obviously, I'm not entering off of that. You want to wait. Like, I wouldn't take a trade the first 5 minutes of the market. I'd let price settle again. When the 10 and the 50, or when the 10 is so far from the 50, and also price is all the way up here so far from the 50, it's best, wait for a pullback. Again, another like circumstance in taking a 0-day cross of this 50 SMA, the direction of it is very important. So it was sloped down this entire way right here. There is no entry until it starts to curl. So your entry wouldn't have been until one of these candles up in here, probably near the 10 SMA. On this candle right here would probably be the spot it started to curl, maybe this one. And then you go short once that 50 starts to level out and curl. You could just use this 10 as a stop if this drop right here from the 10 and the 50 is a little bit. So if you just want to trail the 10 as your stop, ultimately the trade is valid until we lose the 50. But with the volatility recently, I probably would have just trailed this 10 SMA right here, and then look at the move you got. Very nice move. It chopped a little bit, and then it finally took off, but it was a good move it gave. And then just scale out along the way. And if you want to like try and hold for a bigger move, just trail the 10 SMA until we close below. Hold your runners until we close below, and then we finally close below right here. That's where you close everything out if you had runners, and then you just wait for a 50 SMA dip, and that's what happened. We got the 50 SMA dip right here, and you could have shorted some more. Got a nice move. We got a closure above the 10, and sometimes when we do get this type of move and we are in a bearish market, we come down to 50. We bounce from the 50. A lot of times we do close back above the 10, and when we close back above the 10, that could be a spot where you take a chance and average up on your position, because likely if that closes above the 10, we're going to continue lower, and that's exactly what happened. Here's the full chart. I mean, look at this. I mean, very clean chart. Every single dip to this 50 got eaten up, and then the rest is just history from there. It's very simple. Market's bearish. You buy those 50 dips and you get paid. It's as simple as that. So yeah, that was a trade we took. And then again, another trade we took on the 11th. I think this was, that was the day after. So again, what I say in the last trade, your best trade is a direction or 0-day cross in the direction of the Friday contract trend. So trend's bearish. We took the 0-day cross. 10 is crossing above the 50. The 50 sloped up. Beautiful trade. Beautiful entry. Very simple stuff. It just doesn't get easier than that. And then this is the same chart. We ended up, getting a solid move and then immediately getting a quick dump to this 50. And the way this 50 looked during the trade was so nice. The 50 is sloped up super hard. When it's sloped up, like when it's curled up nicely, that makes it more of a stronger area of support. So this dip to the 50 is a very, very good spot to add short. Since the market's trading bearish, you buy these 50 SMA dips. So another thing, I go over this all the time. If the market is not trending on the 30-minute time frame, so if the 10 is below the 50 on both sides of the Friday contracts, like the puts or the calls, or puts and the calls, which we weren't, but hypothetically, if we say we were neutral at the time, which means there's no trend on the Friday contracts, the 10's below the 50 on both sides of the premium, then you wouldn't buy this 50 dip. So that's something you have to understand, because when we are in a neutral market, the trend on the 0-day contracts isn't likely to hold that long. So you don't buy the 50, you would wait for the closure back above the 10. So like in this case right in here, let's say the market was neutral, you wouldn't buy this dip right here, you would wait for the closure back above the 10 SMA, and that pretty much gives the confirmation that we're gonna head up a little higher on these contracts. So that's the difference between a trending and a neutral market. In a trending market, you could hold longer, buy 50 dips. In a neutral market, you take profits quicker and you wait for the 10 reclaim on the 0-day chart. You don't buy that 50 dips. So that's pretty much the main difference between the two markets. And then again, another cross we got. I mean, very simple. 10 crossing with the 50. There was no entry, again, because this 50 SMA was sloped down this entire way until right around this. I think this candle right here is when it started to curl. That would be your entry. You don't just buy when the 10 crosses the 50. That 50 has to be curling up or like flat to take an entry. So don't just slap any time the 10's crossing the 50, because if you do that, sometimes you're going to get wrecked because you don't wait for that 50 to curl or be flat. And that happened right here. And look at the move we got. Very simple stuff, man. Like, there is no strategy out there that's as good as the system, as simple as the system. Like it's the same types of trades day in, day out, and it's very easy to understand the entries and stuff. Like, in my opinion, like, there's no other strategy, there's no fancy terminology, there's no like ICT model that is as simple as the system, and it's very simple. I mean, and the way, like, the extent at which it reads the market is unmatched. Like, ICT, like, okay, it's nice. I see people do well with it, but it just doesn't compare to the extent at which the system reads the market. Like, the last 3 weeks, I saw some ICT guys saying, "Oh my God, this price action's terrible." Like, I don't know what you're talking about, because the market's moving like crazy, and we're getting these crazy moves intraday, and we're able to catch them because of how the system is like designed. Like, that's just how it is. When the market moves, the system will catch it. It's just how it's made with SMAs and how it's designed. So yeah. So this is one of the instances where I took a call across, and that was, like I said, it was because we had a big gap between the 10 and the 50 on the 30-minute. So that is why I did take this 0-day cross on calls. Again, 10 crossing with a 50, 50's curling up. Very simple stuff, and look at the move you get. I mean, these contracts probably went over. Yeah, these contracts went over 100% since the cross. Futures were probably up like 100 to 200 points on NQ. Very simple. And then this was another trade we took. Like I said, the market's been bearish the last 3 weeks, and we focus on the short side. So in this instance, off of the open, this is where we opened up on the calls. Nothing really looked good until this 10 crossed below the 50. So like I said, market's trending bearish, focuses on the short. This trade right here is a negative cross on calls. So, since the market is trending bearish, this call side is likely not to hold. So we just waited for this 10 to cross back below the 50, and we went short. And a lot of the times when this does happen, so when we are trending bearish and we get a cross on the opposing side of the trend, like on the call side in this case, and that 0-day chart goes negative, so like I'd say like it's very highly likely that we go and test the 50 SMA on the put side. Like, that happens so many times, and that's exactly what happened. We came all the way from here, from this negative cross, into the 50 SMA on the put side, and that would be your final take profit if you're still holding, because that's pretty much the make or break spot where they're going to reject this 50 and get a balance, or it's going to go and cross and you just reshort. So that's why it's best to just sell right here at that 50. But since we are trending, it is likely to go and cross, but I just like to be safe, sell at the 50, wait for the cross to go short, because then you can just lock in these gains, and then if we get the cross, okay, it's more short, and then if we reject, you're good, you already locked in your profits. So that's how I would play that. And then all these three charts are like the same like day, so these all kind of tied in with each other. So we were at that 50 SMA right here on the 30-minute, which is a very key pivot at the time that this chart was going negative. So this negative cross pretty much confirms that bears are going to hold this trend and we're going to get a dump. So that was pretty much the confluence with this trade, and it was a very it was a beautiful setup. So again, this 50 dip is a massive support area on puts when we are crossed, and a lot of times we come down to 50 and get a bounce from it, and that ends up marking like the top in this case, since these are puts. Or if these were calls, it would mark a bottom. So very simple stuff. And then on Friday, this is what we took. Actually, no, I'm going to save this for tomorrow's video, because just so it's something I could go over and try to recap. But I mean, it's very simple in my opinion. We're just playing 0-day crosses, 50 dips, 50 rejects, it's really not hard at all, and it reads the market like a book. The hardest thing with the system is just, being able to limit your losses. So when we are in a neutral market, which means that the 10 is below 50 on both sides of premium, which right now we are neutral. So, this call side is okay, right now I'd still say we're neutral because we don't know how Monday's going to open up. So right now I'd say we're neutral. 10 is below the 50, still technically on both sides of the premium. So this is the 10 SMA, it's below it right now. Also the 50 has to be level or curling up for it to be a valid cross. And we're still sloped down. 10 is still below the 50 right there on the call side, and then we go to the put side. You can see 10 is below the 50. So this is another reason why the market did rip on Friday. So the 10 is going below the 50 on the puts. It's like the same scenario as or same idea as a negative cross on the 0-day chart. So on the 30-minute, a lot of times when we lose the trend, the opposing side gets a rip. So since bears lost the trend on Friday, we got a rip higher on Friday. Very simple on the call side. So that's there's just so many ways to read the market with this system. It's great. And yeah, I mean, it's very, very simple. Like I said, I was going off tangent there, but in a neutral market, that's when you want to size down, size less, and you don't hold as long. Like on Friday we were still neutral, so I still caught 90 points on Friday, but I mean, that's plenty, and that's the only trade I took on Friday because I know we're neutral and there's no trend, so I just kind of packed it up at that point. So that's the best thing you could do when we are in a neutral market is just take one trade. If it's a winner, okay, just pack it up. If it's a loser, okay, just pack it up. I feel like that's the best way to navigate a neutral market, or even if you want the best success, don't even trade a neutral market. You don't have to, because there's no really edge in the market at the moment. There's no higher time frame trend that you could really milk out. So if you only traded the trending market when we're crossed on the 30-minute, you probably won't have many red days. When we're trending on the 30-minute, I really don't take many losses. This week, I think I took one loss. I didn't give it to the Discord, but that was actually, well, I guess we weren't trending because we were neutral on Friday. So yeah, so I don't think I took any really losses in the last couple weeks. Maybe paper cut losses if I'm averaging up, but I mean, we barely took any losses. It was a very easy last 3 weeks just because the system reads the market like a book. So yeah, that's what we did the last week. Hopefully you guys learn things from these videos, because you don't need to be in the Discord, but I highly recommend you do join, because you could see how the trades play out live. When we're looking at the chart and be like, oh, that's why he's entering. It's oh, you enter here when we're crossing. So it's just kind of an easier way of seeing how it plays out during the day. But you don't need to join, because I have a ton of videos on the YouTube on how to read these charts. So very simple stuff. If you guys enjoyed, drop a sub. If you guys want to learn, like I said, join the Discord down below. There's no Discord out there that has this much value in there. You got me. You have the creator of the system that we got going. He gives trades. I give trades. I think we barely took any losses this week. Maybe 1 or 2, but I mean, out of 10 trades we both called out, I mean, ton of money to be made. So if you're gonna join a Discord, it'd be this one. There's no one's trading this. There's no one out there that's teaching you this except for us. It's a very unique way of trading. Most people are either drawing stuff on their charts, or I don't even know what else there is besides doing that. So this is very simple. We're not drawing nothing. The only time you draw things is for overbought, but I mean, at that point, you don't even need to do that though. So I mean, we're just using these SMAs with our eyes to gauge entries, and it's very simple. So yeah, if you guys enjoyed, drop a sub, join the Discord if you want to learn. I'm out. Peace.